Hey, what's going on, everyone? Today we're going to talk about the big short investor Michael Burry. Apparently, by the Motley Fool, he has about 10% of his portfolio in two magnificent 7 AI stocks. You can see them right there behind our logo. You guys can see it's Amazon, Google. Those are the two stocks that he has in his portfolio. Now we're going to talk about Amazon, because I ain't do a price prediction in a while. So I said, all right, cool. Let me go ahead and help the family out. Let me show them what I think the price is about to do in Amazon so that we can just be prepared. Now, if he has a portfolio, a position of Amazon in his portfolio, then obviously we must be sitting pretty, because we did a price prediction in Amazon. Look at that. We talked about Amazon going all the way back here to February of 2024. Looking for the price to continue to go up in price, and we are literally hitting our sell zone right now. So whenever he came through and purchased Amazon, we want to thank him for lifting up the stock's price, because as long as we get ahead of these people, we can ride the wave. So in 2023 fourth quarter, Scion Asset Management reported 2 purchases that may surprise his value investing followers, Amazon and Alphabet or Google. These magnificent 7 growth stocks have typically been shunned by value investors due to their high earnings multiples. Yet, as of the end of 2023, they made up 10% of Mike's portfolio. Mike ain't crazy. You think he cares about multiples? You think he cares about value investing? No, this man is just simply trying to make the bag. He's just trying to make money. So how is that shunning? Why would people hate against a man who's out here just trying to make bread? Make it make sense. If he wants to buy Amazon, if he wants to buy Google, understand that he thinks that there's a big opportunity for him to make money. Same for you. Don't try to segregate yourself into being a particular type of individual or trader or investor. If you see a good stock, handle your business, make the bread, and then move on to the next opportunity. So this article is trying to state that the value investors who pays attention to Michael Burry, they won't like him because, oh, he bought Amazon and Google. At first glance, Amazon seems overvalued. Here we go. They like to base price of a stock off of the fundamentals of the business, when in my opinion, both should be separated. You cannot equate or correlate both of these separate entities into one. Why? Because you have market dynamics, market structure, supply and demand messing around with the stock price of Amazon. Then you have the business portion. You got business expenses, business operations, economic stability, interest rates. That affects the business operations. How can you correlate those two together to come up with a price as to what the stock should be? So at first glance, if you're strictly looking at the fundamentals of Amazon, it may seem overvalued. But that's the old way of how people try to price what a stock price should be. Its price to earnings ratio is 62. It's more than twice the average of the S&P 500, 28 as of this writing. It's the PE ratio for the S&P 500. However, see, that's the key word right there. However, when you look under the hood, it is clear that Amazon did not show its true profit potential in 2023. Wait, hold up. So you're basing price to earnings ratio off of old data? Because like this article goes into, it's clear that Amazon did not show its true profit potential. The key word there is potential. Something that no Wall Street analyst can get right all the time. It's only an estimate. So if the estimate is incorrect, then guess what? the price to earnings ratio is going to be incorrect, or it's going to be off. It's not going to be right. Throughout last year, the e-commerce and cloud computing giant expanded its operating margin, leading to approximately 7.5% margins for the last 2 quarters. That was up significantly more than 2.5% margin it posted in 2022. Again, the estimates, the reports were incorrect of what the analysts were looking for. Maybe they are underestimating the potential in Amazon. Had Amazon been earning a 7.5% profit margin for the entire year on its total revenue of $575 billion, it would have generated $43 billion in profits in 2023. Against its current market cap of $1.9 trillion, that would have given it a PE ratio of 44, which around 62. But even this doesn't tell the full story. Here we go. Now, it doesn't tell us the reason why Michael put this stock in his portfolio. This is just Motley Fool's apparent reasoning as to why Michael could have placed this stock in his portfolio. These are literally no-brainer stocks, though. Who doesn't know Amazon and Google are good long-term investments? You had to be living on a rock. It is not just about knowing when to buy, it's knowing when to sell. I owned Facebook when it crashed back to $20 at the initial popularity wore off. When it hit $50, I sold half, thinking social media and the kids, and what kids like can change with the wind direction, and I didn't want to kick myself. Wow, what a genius. Investing in Amazon and Google. I never would have thought of that super secret play. These people are going crazy. Wait a minute. Isn't this the same guy who said back in October that the market's going to crash and that he was shorting the blank out of it? Yeah, it was that same guy. But again, you're able to switch teams. Like, that's one of the best things about the stock market is that you're able to switch. Michael, back in October, did short the S&P 500. Like, he was looking for semiconductors to go down. He was looking for the S&P 500 to go down. But once he saw that the market wasn't doing that, he had to say, all right, cool, I got to let that play go and start playing for the long side. Start buying the market. Because the market will humble you. So, let's look at this on the weekly chart in Amazon real quick. This is just a very strong stock. I don't know. Like the other one of the comments said, it's a no-brainer. Amazon looked like it wants to break these all-time high levels. Let's look at this on the monthly chart. I mean, what else can you expect? It's a strong stock. The last 3 6-month price bars has just been crazy. Just imagine if you got that buy indicator right here on this 6-month bar back in January 2023. We already got the buy indicator triggered on our chart. So look at that. You'll be up 43, almost 44% right now within a year's time. Okay, so yeah, I'm going to go ahead and take this off. So if we were to get out on this last 5-day bar, that's around 8.88%. What I'm going to do though is looking how strong this market is in Amazon. I'm going to take a break because it looked like it may want to begin a descension to the downside. So let me do this. We're going to create a buy zone there. Because Michael Burry may begin to sell out in his position. And that's the crazy part. When he comes back out and does his SEC filings on what he actually holds and what he sold, Amazon may be one of those stocks that he sold over the last 3 months, but you don't know when, right? So let me just fall back and let the market in Amazon continue to do its thing. But overall, yeah, the stock is still bullish. It's still strong. But for me, I want to see the market come back down a little bit more before I anticipate that higher price action to go up. So yeah, give me your thoughts though. Make sure you maintain the profitability. And as always, trade different.